Hi traders, it's Jakub from FINEIGHT, and I've decided to record a video about commercials because I've received very good questions in a personal message and from Michael, and it's very good to answer that. So the first question is how I connect the technical analysis and the COT together. Well, the answer is simple. COT is fundamental background behind the trade, and price action or technical analysis is timing. So commercials, they provide information that something is about to happen, but the price action or technical analysis, it's for timing. So you have to find the right entry when you want to put your money in. So the commercials are the indicator if you, for example, monitor 2000 trades every week. So they provide you information what they are doing in the market, because the commercial, they have the best information about the commodity, about the company. If you are the owner of the company, you know well what's happening in your company, if it's going uh, if you want to provide some new technology or not, and if it will cause that your stocks will rise or it will go down. So you have the best information and you are best informed about your company or about your commodity you are selling or buying. So commercials are fundamental information. The commercial index is index of net positions of the commercials. So if you are a beginner of in trading, the best way is to use index, because you can you can say that the index is above 75, it's a buy zone, and below 25, it's a sell zone. So if the index is about buy zone, look here, market went higher. If the index is below 25, you can say that the market will probably go lower because commercials increased their short positions. It's not as simple as it maybe looks, because for beginners, or exactly for beginners, it's very hard to implement this technique in your trading style, because commercials, they try, for example, to buy every move above 75 in COT index and sell every below 25, but it's not working. Look, for example, here, commercials were below 25, but market went higher and higher, because you have to understand what's the fundamental background behind commercials. Commercials, the best setup is if you have a downtrend, and commercials, they increased their short positions in a downtrend. So they believe that downtrend will continue. The opposite side, if you have uptrend and commercials increase their long positions in the uptrend, they believe that the market will go higher and will create higher highs. So they stop the pullback. And in this case, you broke these two swing highs. Market went higher, tried to do some retracement, but commercials heavily increased their position. This is net positions in this line. It's their long minus the short, and look what happened. They heavily increased their long positions. So they stopped the market, they stopped the pullback, and market could continue to the upside. And look here, we were in a very nice downtrend, and commercials, for example, here there was a pullback to the upside, and commercials heavily increased their short positions. So they believed that the market will continue in the direction again here. But if you look here, it's very difficult to see some some major points. Okay, so it's much better for the beginners to use the index with some period, for example, 26 or 13. It depends. Some commodities use 13, some commodities use 26, but you can start with 26, it's good. And if you see some very nice trend and commercials are below for example 25, you can be sure that market will continue. And it's the first information that the commercials gives you. Okay, so use the index if you are a beginner, because it's very easy to see if it's below 25 or above 75. But you have to understand if we are in downtrend or uptrend, and that's the connection with the price action. But again here, commercials were below 25 and market went higher. So you have to use the technical analysis, some volume profile, some support resistance levels to find the best entry point. So that's the connection with the price action. Everything starts for me with commercials. I monitor 3000 trades and I have to see some very nice, let's say, information that they increase their short or long positions. I divided markets into two groups that are in a long and that are in a short and that are sideways. I really don't care about sideways markets because I want to see my strong pattern that I see that they are selling lower prices and buying higher prices. So uh, once I see that commercials increase their positions, for example, in a short downtrend, and I see some pullback, then I switch to daily chart and I try to find, for example, 1 to 3 pattern on some very nice support and resistance level, and I try to connect that with the volume profile to use the price action for best timing when I want to put my money in. So that's the connection with the price action. These two indicators are in trading view. If you click on indicators, you can put COT there. But yes, and I use COT data and COT index, these two. Okay, these two indicators are not ours, so but they are good, so you can add it to. We don't use TradingView for analysis. We use different softwares, but you can, of course, use TradingView. There are many ways how to use COD net positions. Okay, you can, for example, draw some adjust there, so you can see if the change was big or not. For example, here you can do the parallel race, and you can see that here the commercials become heavy buyers, and look what happened. It stopped the market. But as I mentioned before, this market is in a huge downtrend, so this is very risky trade. But some traders, they try to reverse that. But remember, the strongest signal is if you see some trend in commercials, they heavily increase their positions, and you can measure that by putting COT index into a chart, and you can find the best entries. So that's the connection or the answer how you connect price action and COT. What's our experience using COT in our trading style? Well, we use that many years. I really like if I see some advantage in markets. I really don't like only technical analysis because I have to say that I don't believe in that. So I really have to see some fundamental background behind the trades that the guys who have enough money, much more money than you, that they are in the same direction like you, and so you trade with them, not against them. So that's the reason why I love commercials, why I love this technique, because it gives me information where the market is about to go. The problem is commercials are, for example, heavy buyers for a long period of time. Look here, they were heavy buyers and market went lower. So it's very difficult to find some reversal points. So it's really better to take trades into the direction of the trend with the commercials, not against them. So we use that every week because we monitor 2000 trades. We pick, let's say, 200 that are in a good setup from the commercial perspective, and then we try to draw zones, volume profiles, trend lines, and we try to find the exact entry where we want to enter and we'll enter the trade. So that's the second answer to your question. Where you can find learning how to interpret those data. I think I will record videos, more videos about this problematics, because it's worth it. And you will use that in your trading style, and you will see that it gives you very good advantage instead of using only technical analysis. From this video, the most important thing, try to buy above 75 and try to sell below 25, but you have to find the exact entry on the chart, on the price action in the direction of the trend. So I'll record more videos about that. And I think that's all. Those indicators are not ours, it's in the trending view. So guys, remember, commercials are guys who know what's going to happen in the market. You will never ever have information like that, like them, what's happening in their company, what's happening in that futures, what's happening in that market. They have the best information so they can act to that. They can, for example, hedge their positions, they can completely reverse the prices because they are, for example, too low. And that's the main goal for this video, to show you that commercials are guys who, well, let's say, stops some pullback, some retracement in a very nice trend. So if the market is like this, like sideways, this is a little bit risky trade because you have a triple bottom, you have very nice price action, but commercials heavily increase their positions. But it's not so strong signal because we are in a sideways market here from the previous downtrend. So you are trying to reverse the trend and it's a little bit risky. But look here, but commercials are heavy buyers and you have a very nice rejection here. And that's the connection with the price action. I see very nice rejection, very nice heavy buyers. So that's the reason why I wait for 1-2-3 pattern. Because 1-2-3 pattern shows that I have a confirmation for commercials. And many traders, from price action perspective, they will enter that trade at the 1-2-3 pattern because it's well known. So it can reverse the market. Okay guys, it's last information about this problematics now, and I'll record more videos about commercials, how we use the adjustment here, for example, these two black lines, and how to find some additional trades in the market, because the perfect trades happens only once or twice a year, so you don't have much opportunities in 1 year. Thank you guys, and have a good trading.